How is everybody doing today? Welcome to a interesting company we are going to be looking at today. The name of this company is ALCOA Corporation. Google it, look it up, see what they do, what have you. Today we are just going over the price history of this particular stock, which is listed on the New York Stock Exchange, which coincidentally enough was listed all the way back in 1968. So starting from the beginning, you have from 1968 all the way to 1994. For that 30 years, almost 30 years, the price of this company, the stock price of this company, ranged between the $4 mark and the $20 mark. Okay? See, for the first 20 years of this company, let's say 14, for the first 15 years of this company, price range between 3 something to 12. Up and down, just up and down. Okay. And then oddly enough, in 1983, the share price had made a new all-time high of $11. It had broken all previous highs from the past 15 years. Right here, at this moment, it had broken all previous highs. So in May of 1983, it had made a new all-time high. Right here. And price had gone up a little bit to 13, and then oddly enough, it pulled back down. In 1984. And interesting to see where it pulled back down to. It had pulled right back down to here in 1984, which kind of retested the previous zone of price. So it had pulled away from what it had been doing here for 15 years. Okay, for 15 years it had done this, and in 84 it pulled away, and it had come right back down to it, and kind of did a little dance number in that same area, kind of giving it one last, hey, do you still like this price level? And it started moving away from it, and it never went back. So how does that little history lesson relate to what's going on today? This stock has been going up for decades. Decades this thing has gone up. From 1968, 1998, it got up to $50. Okay, so if you were an initial investor in this company, $6, $7, $8, $9, $10. And you had waited 30 years, you would have 5 times your initial investment. Okay? That's just the history lesson. What's going on now with it? Oddly enough, as you can see, big move up, a sell-off. Big move up, $100, a sell-off. Another move up, $108, all-time high. And then a sell-off. A little pullback, and a big sell-off. Wow. So somebody finally decided to see a return on their investment and sold off everything they had in this $80, $90, $100 range. Okay? We're getting to the juice. I'm just giving some quick examples here. Okay? Now, when it sold off in 08, the big market crash of 08, everybody remembers that, okay? The housing crisis, all that deal. So when it had its big sell-off in 08, where did it go back down to? It went right back down to $15, $13, $14, which coincidentally enough is where? This area that it had danced around for a decade. This company and its share prices are not doing anything new. It just decided to use the financial crisis as an opportunity to see a return on its investment. Everything's crashing. We're going to sell everything we have off and revisit a previous area, which it did right here. All it's doing is just saying hello one more time to an old friend that it used to hang out with. There's our friend. This is our old friend. So for the past 20 years, 16 years, we have just done this up and down. $30, $15, $50, $6. Even here, it's the $6 range. All it had done, $6, oh, that's horrible. All it had done was come right back and visit this old friend over here. This very old friend. That's our old friend from years ago that we used to hang out with back in the 60s, 70s, and early 80s. So we made a giant move up. We visited our one friend. We danced around a little bit. We visited our very old friend. And then what happened? 2020. It just straight up from $5 a share all the way back up to $100 a share. Wow. So you cannot tell me that trading demand does not work when you look at this perfect example of this stock. Okay? We're going to clear the drawings. Okay? If you were watching price up here, if you're a smart investor, you're looking for areas below where could be potential buys. You're looking to buy here, You're looking to buy here. You're looking to buy down here. In case price ever revisits those areas, you can get it at a discount. You're mad because you don't want to buy it up here. You feel like it's too high. Good. You should be mad. So be patient. Wait for price to revisit old friend. And those who were patient and waited for price to revisit our old friend were rewarded in recent history on this stock. Because price had come down, it visited this old friend. Well, those people got their orders filled at $40. It visited this old friend. These people got their orders filled at $20. And over time, it even revisited the really patient people who wanted to see $5, $6, $7, $8 an hour, $8 an hour, $5, $6, $7, $8 a share price. It got their orders filled too, and it moved up and away. And who knows, it might never visit those prices again. And now, 2022, a nice move up and a nice sell-off. Because anytime price moves up, it needs to come back to a more normal range. Okay? And let's show you what a normal range looks like. Okay? Simply enough, if you go from the lows, $4, $5, all the way up to $110, you are looking at the history of this thing. You're looking at the whole life. It's right there in front of you, plain as day. They can lie about how much money they make as a company. They can lie about this and that, but companies can never lie about the price of their stock because it's recorded in history. That is why learning price action and technical analysis and investment is key, because it gives you a basis in order to go with what kind of decisions you're going to make. So we have the whole range of this thing, $5 at the lows to $110 at the high. Where are we at right now? We're right here, $32.75 today a share. Where is this at in correlation with the history of this stock? Well, let's just draw a line right in the middle. Let's make it simple. Right there. You can consider this a low area of the price history and a high area of the price history. Is this not getting simple now? Is it making sense how the market works and plays with you? What do you want to do when you are an investor? You want to buy low and sell high. That sounds so easy to say it, but it's so hard unless you're truly stepping back and taking a long-term view on things. Okay? So we are right now at the low end of our range. There's nothing wrong with picking up some shares here at $30. There's nothing wrong with picking up shares at $20. There's nothing wrong with having orders to buy at $10. There's nothing wrong with that. I'm looking to buy here, 30, 20, 10. 3 different orders. I want to buy 100 shares at $30. I want to buy 100 shares at $20. And I want to buy 100 shares at $10. Okay? I'm willing to put $6,000 to purchase this stock. Why? Because it's at the low end of a range and it has history to it and high probability. Now what's going to happen? Am I going to, if price does go down here and fill out all my orders and take my money out my bank and now I own the shares, is price immediately going to jump up? No, of course not. Price is going to do that same old song and dance, tricking everybody. And then somewhere down the road, could be here, could be here, it could be all the way out here in 2040, 2050. Somewhere down the road, it's going to come back and revisit where? At some point in time, it will come back and revisit the high area of our range where we want to sell. We want to sell at 60. We want to sell at 70. We want to sell at 80. If it's looking juicy, we'll have a couple orders ready to sell at 95. How about that? And we would have seen an excellent return on our investment. But it's all about how much time you're willing to put into a position or an investment. All we can see is what the history is looking right now. And right now, the history of this stock, we are at the low end of the price of this. We are in the bottom 30% of the history of this thing. You can even cut it off in quarters if you'd like. Funny how that works, right? Look at price. Now look at the lines I've just drawn. How did I draw the lines? I did nothing special. All I did was just take our high and our low of our history. I put one at the 25% range, 50%, 75% range. And look how price behaves with it. It's dancing up here, and it comes touch the 50% range. It goes above, and it tests the 50% range. Makes a nice little W right there. That's a trick right there. It comes up, bangs its head against the 75% range, goes back and tests the 50. You could have been making money right here watching this thing just bang its head between these two areas of its price range. And then bam, all the way up to the 100% price range. And then boom, drop down. When you saw this drop down right here, everybody was selling. Everybody and their cousin were selling everything they had. Who was buying what you were selling? All the traditional investors that know the history and have seen the history over here. They had orders down here to buy. They don't buy up here. They buy down here. And their children will sell up here. And their children will buy back down here. That is the name of the game. As far as where we're at now, look how we're just dancing right here with the 25% range. We're at the bottom 25% of the history of it. Now, I go to the store and I want to buy something, and there's 2 cans of Pepsi on the shelf. One Pepsi is $1. Well, that's full price. Okay, so if I want that Pepsi, I'm going to have to buy it at full price up here. Another Pepsi is only 75 cents. Well, maybe I'll buy that Pepsi for 75 cents. It's still good. It's not expired. And another Pepsi is only 50 cents. That's half off the Pepsi. I might want to buy that. And then you see another can that's only 25 cents. But it's hiding way in the back because nobody looks for the good deal. But it's not even expired. It just fell out the box. You know, it's got a dent in it. But it's still good soda in the can. Which can of soda are you going to buy? Of course you're going to buy the one for 25 cents. It's perfectly fine. There's nothing wrong with it. Same goes with investing. There's nothing wrong with buying something on discount. Just because something's hot and moving up doesn't mean you have to buy it. This is a good deal. $30 for this stock. This is an excellent one to just purchase today. Start getting your orders filled. Maybe have a couple more orders down here. I want to buy 10 shares here, 20 shares here, 30 shares here. Let me buy 5 shares today. And then you hold them. I would be selling them probably right about here. $78 I'd sell some of them. $95 I'd sell a lot of them. And that is a beautiful return. Quite simply, anywhere between a 4 to 5 times your money by simply purchasing on the discount and waiting for price to go up. And if it goes lower, so be it. We buy more, $1, $2, $3. So long as this company is going to stay in business, the shareholders will want to see a return on their money at some point. They will want to have an area where they can sell from. And believe you me, shareholders are greedy. They're going to be selling at 100. They're going to be selling at 110. They are greedy. What do? We be a little bit less greedy than they are. We sell before they sell. We sell at 95. We sell at 80. We sell at 90. We might even sell some at 70. We know we're going to get sold off because we know the greed is up here. You don't think shareholders don't know the all-time high price of the company that they have shares in? Of course they do. They are buying all of this up in the anticipation of getting back to this level. And that is just a nice little story, future projection of this company that I have been looking at. I love everybody. I hope you enjoyed this little detailed analysis of the history of ALCOA Corporation and just how I view the market. None of this is financial advice. This is all just how I view the markets day in, day out, and how we view the money printer that is the markets. And I love everybody, and we'll catch you on the next one. Peace.